All right. Hello, everybody. This is Nate Curran. I'm the marketing director here at TAG and eBacon. We're running into just a little bit of technical difficulty with Jason's computer. He was all ready to go, and then all of a sudden his computer kind of decided that it didn't want to connect to the internet anymore. So we are apologize, but we are going to wait just a couple more minutes for him to kind of get to a place where he can join us. But just a couple housekeeping things as we have more and more people join us, and that if you could please keep your microphones or your speakers and microphones muted, and then as always, there will be a little chat button that you can see in your upper right-hand corner. It kind of looks like a little thought bubble. If you could click on that, ask any questions at any point in time during the presentation, and we will get those asked, and I will make sure that Jason addresses those. So if you could bear with us for just a couple minutes, we'll get Jason set up and we'll get this started. So thank you very much for joining us, and we'll see you here in just a minute or two. Thank you.
Okay, I have made it.
Awesome. Technology. We love it, right? Every day.
And now I'm trying to get my desktop working again. I apologize, everybody, if Nate didn't tell you I lost internet and everything, and I'm trying to get everything set back up. Nate, can you give me presenter?
Sure will.
Rates again? Thank you,
All
sir.
right. Get this back over to you. You should have access to that right now.
Okay, perfect. All right, Nate, can you tell me, are you guys able to see now?
We're in. We can see your screen. Yep.
Hey, look at that.
Teams.
You know, if that's the worst thing that happens during the next hour, we're probably doing pretty good. So, alrighty then. Welcome everybody. I know we're actually a little past the hour, so we're going to jump right into this. Not too much banter or fun, commentary from myself or Nate. Let's see here. So obviously we're talking about loan forgiveness, and just a really brief legislative update, but it's about what we're going to be covering is how the SBA loan forgiveness spreadsheet that's generated through Viper works. So let's move along here. All right, the PPP form generator, the forgiveness form generator, legislation update, and the important dates and deadlines that are coming up, and then of course Q&A. And like we did the last time, we got really good feedback on you folks giving us your questions as at the moment, and us addressing them when it was more timely and right on the spot instead of waiting to the end. So we're going to do that same format today. You guys have a question, go ahead and put your questions in the little question section of the PowerPoint, or the webinar, and Nate will look at those, vet that stuff, and then he'll go ahead and ask the question right during the course of the presentation. So let's see here. All right, overview, things to consider using the form. tab by tab walkthrough. That's the really exciting part. And printing and submitting. Here we go. So the spreadsheet overview, we created this to help out our clients, obviously. The complexity of calculating out all of the values, the comparisons and everything is ridiculous on so many levels. I know there's a lot of other services out there, or softwares, Excel spreadsheets that you can purchase, etc. One of the nice things about this, it is specifically designed for our clients because it's pulling data right from our system. So you're not having to go and populate all the data and pull it up yourself. It's pulling it directly from the system, and we'll give you all the support documentation you need, tables, etc. If a client has run with us for all of 2019, the spreadsheet we feel should be very good, very accurate as far as the output. If a client hasn't run with us for all of 2019, there will be missing data that you will likely need to enter in order to get the information to come out correctly. So we want to make sure everybody is aware of that it's by design, a lot of these calculations have lookbacks in different periods, and throughout 2019, a lot of the calculations pull data from that as well. So it is very important. So again, if you are a client that's been with us for all of 2019 through current, the output should be pretty well spot on. We still are going to recommend that you look through it just for accuracy and questions, etc. But it's going to be much more of a need to vet through that and fill in data that we just don't have in our system if you haven't been. So we just want to start with that. Where to find the loan forgiveness spreadsheet? Yes, I did put this in the blog post, and I apologize for anybody that tried to pull it up yesterday. I did say we were targeting yesterday, but missed that. It is released now, so this is available. This is where you would find it. Go to the your company tab in the company sub tab of that. Then you go down to companies, or not company settings, but yeah, I'm sorry, in company settings, and you get the SBA forgiveness. So that's how you pull the loan forgiveness application itself, or the generator itself. So company settings, SBA loan forgiveness, and then it will generate this screen, which will look like this. So this is the information that we need to capture, and there's some instructions on this page, and you'll see throughout the spreadsheet and whatnot, there's instructions elsewhere as well, just to make sure that you guys have everything in front of you, and you don't have to go too far to get some answers. But this is the information that we need initially to generate the spreadsheet. From this, then you will be working in the spreadsheet, and that's what we're going to go through tab by tab here in a moment. But this is some of the most basic information that we have to have available in the system to generate all the formulas and everything. We originally had thought, and I think if anybody was on some of the other webinars, we were thinking we'll just capture everything right on this screen, and then we'll produce one output and it'll be done. Well, as obviously the complexity of the application itself and having more and more bits of information that we needed from clients, we figured, okay, let's just make the generation simple and as simple as possible, and then we'll do the more complex and sophisticated things inside of the spreadsheet so that you have easier control over it.
Yeah, so Jason, just real quick, so I think the basis for making this is that everybody has kind of that unique, they have their own little unique nuances within their business on how they pay employees and what's kind of working for it. And so I mean, that's kind of the whole point of this, right, was to build out a way or a system or a process for our clients to kind of be as close to customizing this for their individual needs.
Yeah, and this does start that that process right from here. So like in the loan coverage period, I can't pull the drop down from here, but you can select your 8 weeks or your 24 weeks. Obviously, if you're got your loan after June 5th, then you only have 24 weeks as an option, et cetera. So there's some customization right here, and then all the additional customization will be inside of the app or the spreadsheet itself. But yes, there's so many nuances, so many different variables. Using ideal FTE calculation, that's the scenario where instead of the standard 40 hours and 1/10, depending on the number of hours an employee works, so somebody that's at 30 hours is a 0.8 of a FTE. The ideal calculation says if you're not 40 hours, you're a half. So if you got a lot of people working under, half time, under 20 hours, then using that structure might make more sense than simply using the standard format of 1/10 for every, every portion of the hour. So yeah, you're absolutely spot on. Same thing with like the alternate covered period. Alternate covered period is only available for biweekly and weekly clients or people that process weekly and biweekly according to the application. So we have that function in here. You can use your alternate covered period. Then there's the scenario of perhaps you might have more than one covered period or more than one frequency. Maybe you're a weekly and a biweekly. We have clients that have that kind of sophistication in their structure. So if that's the case, then which of those do we really want to use? So we've given you the ability to even pick the specific start date of those two options and whatnot. So again, there's so much opportunity to tailor this to a specific client, and making sure that we get that into the system and accounted for. It was definitely the challenge. I mean, general is easy, custom is tough. And so that's what all of this extra work has been done for. So good point.
And then, know that we're going to go kind of towards the next step and going into the worksheet here. But if a client wanted to share this with their CPA to review, they would just take the spreadsheet piece of this and send that to them, correct?
Correct. That would be the appropriate thing to do for CPA to look at. Obviously, whether it's your lender that you're actually submitting to, or CPA to review, if they have questions about documentation they want to look back, then you can pull reports out of the system, etc. But yeah, the data is being pulled directly from the system. So if you just sent the spreadsheet over to an accountant, they should be able to go through that and see how things are flowing and where everything is calculating from, etc. So cool. All right, let's move along. Documents that you need obviously are things like, and this is in the instructions of the application itself as well, but show your mortgage payment obligations, your lease payments, your utilities, payroll and tax information. We've even right here below is where the payroll and tax information is from the reports section. So you go into accounting. Under reports, you can pull up your 941s, you can pull up your state tax reports, the summaries that we put together for clients and whatnot. So that's the documentation that the application says you need to have and submit with it. And I know we covered in previous webinar that the process is you submit everything to your lender has 90 days to review everything. If during that 90 days they ask for anything else, then their clock starts over, their calendar starts over. So after 60 days, if they ask you for, hey, we don't have a copy of your 941 from Q2, we want that, then they get another 90 days from that point to complete their part of the process. So obviously we recommend submitting everything that you should. I wouldn't give them things that they're not asking for, but definitely things that you should and that are kind of identified in the application. So again, the IRS tax filings, the state tax summaries that we produce, etc., would all be helpful information that they're likely going to want and make sure that they have on file before they green light it and pass it on to the SBA. So this is just a quick little summary. And obviously everybody that's on the call, you guys are clients, so you know how to pull reports, the SBA registers and that kind of fun stuff from the system already. But this was just a couple of additional documents that would be helpful, and where you locate them inside of the accounting tab and the reports section. All right, using the form generator. So we tried to make it as clear as possible in the sense of simplification. Yellow fields must be filled out by you. There is just data that we simply don't have. And an easy example would be what you paid in your rent. We don't know what you paid in your rent. You're going to have to fill that figure in. Green fields must be checked by you and filled in if they're missing or inaccurate. And what that means is theoretically the data is in the system and it's going to be populated. If there's anything that's missing, if you feel that a number is off or incorrect in any way, because it is a spreadsheet, you have the ability to edit those fields. And you can override them, put in whatever information you want. Now, again, we believe that the information is accurate coming out of the system. It is your payroll data, it is your, like what else? It's your benefits, your health insurance premiums, et cetera, that are calculated in the system, and the retirement plan contributions, those types of things. But again, you have that ability. For clients that don't utilize us for their benefits, we don't have the health insurance information in the system. So that field is in green. It's going to be empty. You'll definitely need to fill that in. So again, the green fields need to be reviewed. They need to be looked at. For the most part, they should be spot on, pull data right from the system. But again, we encourage people to look at that, make sure that they're comfortable, and make any edits necessary. Gray fields, however, are fields in this that are filled in by the system. They're essentially calculations and that type of thing. So do not touch the gray fields as a general rule. There's no need to. Anything that feeds into a gray field can be edited in a yellow field or a green field. So again, you don't need to kind of break any formulas or anything inside of the gray fields themselves. And this is where the calculation, that's kind of where the magic happens, as it were. So information you'll need, again, beyond the documentation to submit, is things like your SBA loan number, the loan amount, the disbursement date, employees at the time of the loan and at the time of forgiveness applications, your EIDL if you got one of those, etc. So just some generic kind of demographic type of stuff that you'll need to fill in. So, all right, and then things to consider. This is probably one of the most important elements of this, which we want to emphasize, is use the easy application if you can qualify for it. Obviously, there are details and you know, there's 3 criteria. I know we covered it in the last webinar, but if you are eligible for the easy application, the recommendation is use that. And the reason being is we don't know how overzealous a lender might be or the SBA might be, et cetera, in looking at this. As a general rule, obviously, we feel like they've got a lot of these to look at. They're going to be going through this stuff, and to try to get through it all and to go and vet every number of everything is unlikely to happen. But at the same rate, I can't promise you that you're not going to have somebody that's just, you know, really wants to make sure that everything is 100% perfect. So if you send the full version of the application and you qualify for the easy application, what you're doing is giving them more opportunities of things to look at and question. Even if they're accurate, it could wind up causing delays and challenges and difficulties. So the easy application is so simplified, and most of the real calculations and everything are removed from the equation, that if you can submit that, if you can genuinely say that yes, you qualify to submit the easy app, use that one. Save yourself any headache that, you know, might come up as a result of that. But and take advantage of that. If you can't use the easy application, then we're going to get into the normal application, and they both generate in the same spreadsheet, so you just pick which one applies to you. But because of those things that Nate talked about earlier, the various covered periods, the alternative start date, etc., or alternative covered period, those types of things, there are variations that can be kind of work through. You can look at various scenarios. So you can produce one and then make changes that you need, and then produce the report again and look at, okay, well, if I use the 24 weeks, I do qualify for a greater forgiveness than if I only use the 8 weeks. And making sure that you're getting the full impact of what the laws and the provisions are right now. Because remember, the laws keep changing, the interpretations keep changing, they keep adding greater freedom as far as how things work. Let's take advantage of all of that. So while people all thought 8 weeks originally, now you got 24. The application gives you some freedom to certainly submit early. You don't have to wait to the end of 24 weeks. So how does that all factor in? That's what the FTE calculations and the covered periods and all that kind of fun stuff, the alternate covered periods, all have a factor in. So utilize those.
So Jason, just kind of to put a little bit of a bow on that, right, is, probably the best thing to do is run the easiest scenario, right? So the recommended FTE calculations, kind of the standard loan coverage periods, if that applies to you, and just see what happens, right? Because if that all works out and 100% of your loan is forgiven, then you don't have to really, pick and choose, right? I mean, that's kind of the how we try to set this up to try to make it as easy as possible.
Yeah, you are correct about that. If you pick the standard, don't do anything necessarily with the alternate covered period, don't do anything necessarily with changing the FTE calculation to the other option that they give you, etc. Pick your covered period, run through it, put the numbers in that you need to put in, and if you're at 100% loan forgiveness, you're good to go. You don't need to compare other options. I mean, you can't get more than 100%, so you're fine. If you're below 100% of loan forgiveness, that's where, so it's a good point. Thank you for bringing that up. That's where you would want to make a comparison and say, well, let me look now at the 24 weeks and see if that helps me out. And then produce it, plug in your numbers again and see, okay, yeah, so at 24 weeks, if I submit it today, I'm going to get 100% loan forgiveness and I'm good to go, because that extra few weeks of payroll helped me get to my number, right? Help me get to the loan amount. So that is a good point. So start with kind of simple standard and then develop from there if you're not hitting the 100% loan forgiveness yet.
Yep. And then, we're getting a lot of questions again on the cover period. And I know that we've, like, even internally, and we've been studying this and living and breathing this for for months now, and we still get confused on it. So can you kind of just, if you could kind of simplify, what does that covered period really mean?
Okay, so the covered period, by definition, the original law said it was an 8-week period, and that begins the day you got the money. So if you got approval that you got your loan on the 8th of June, but you didn't actually get the money until the 10th of June, I don't care about the 8th of June. The 10th of June is when your covered period starts, and it begins the day that you got the money, going for 8 weeks. Then when the PPPFA got passed at June 5th, they said, well, if you got your loan before June 5th, you can pick either 8 weeks or 24 weeks. But if you got it after June 5th, then you have to use 24 weeks. So same thing applies. The date you get your money in your bank account is the date your 24 weeks begin, and you have a 24-week period, so consecutive weeks, right? The alternate period is one that gets a little more complex. Again, it only applies to weekly and biweekly frequencies. But if you got your money on, let's say, the 10th in my example, but your next payroll start date, or the pay period start date, was the 12th, you can opt to use the alternative start date of the 12th, and then the 8-week period or the 24-week period after that. So it just, and what the intention there was is to line up the check dates, the pay period dates, with your 8-week or 24-week period to make it a little bit easier and a little bit cleaner to get through, instead of having partial weeks and then, oh, I got to prorate part of this payroll and the next, you know, and I only get part of that payroll to be inclusive in the covered period and stuff like that. So it was a mechanism to simplify that for clients or for employers out there. So the standard is 8 weeks or 24 weeks. If you're after June 5th, 24 weeks is your only option. The wrinkle that kind of came out in the application itself, though, is that you don't have to wait to the end of the 24 weeks or even the 8 weeks, I guess, to submit your application for forgiveness. If you know you've hit 100% loan forgiveness because you pulled the report out of Viper and you're there and you're at week 13, well, you don't have to continue on. And there are some clients that have expressed concern about, well, right now I'm good, but if I go another 11 weeks, I might run into problems where I can't keep my people full time, or I have to lay somebody off or whatever. Well, then submitting your application sooner is actually an ideal scenario, because the application allows you to use whatever date you submit kind of as your cutoff period. So while it's quote unquote 24 weeks, it's whatever number of weeks you have before you submitted. So if you've only used 13 weeks and that's when you submit, essentially you're really looking at a 13-week covered period. And I'm kind of simplifying that a little bit, but essentially that's what's happening. So
yeah, because the date of the end of your cover period in that scenario is whatever the day that you submit the actual loan forgiveness application.
Right, and that's all about the safe harbor calculations, and exactly, that is correct.
Yep. So before we just move on, just a couple more questions on those calculations. So there's a few questions on when, during that cover period, on what is actually calculated as far as hours as well as pay. So is it the amounts that are paid, or the amounts that are earned during
well,
that?
it's actually both. If you read through the application itself, it talks about paid and earned, but the way the sentence is written, it doesn't actually mean that it has to be earned and then paid in that period of time. It actually says paid and earned during the covered period. So for instance, if you got your money on the 10th and that happened to be your check date, the 10th is included in your covered period. That is paid during your covered period. On the other end of the scenario, if you had 5 days of your 7-day, calendar weekly payroll in that pay period, but you haven't paid it yet, the application specifically says, as long as you pay those days on your next scheduled payroll, then those are included for forgiveness as well. So that's the earned portion. It has to be either paid or earned during that 56 days, that 8 weeks in that example. Yep. So it's not a one or the other, it's a kind of the both. So it's weird the way they wrote it, and they don't really describe it this way, but the way that it's written, and as you go through the calculations, they're actually giving you even more than technically 8 weeks or 24 weeks. You're kind of getting an extra week beyond that as well, because depending on if when you got your money and when your payroll hit. So you might be getting a little bit more than 8 weeks based on the calendar. So
yep. Awesome. Cool. All right, let's kind of move on, I think.
All right, good. And let's see. So I said it earlier, and I'll jump back to it. So, if you can use the Easy app, do that. Details are on the next page. So here's the criteria for the Easy application. If you're a self-employed contractor, independent contractor, etc., and your PPP loan didn't include any employee salaries, then you can use it. If you, which isn't most of our clients, so won't really spend any time there. If you didn't reduce salary, hourly wages more than 25%, so you could have reduced salary or hourly wage by, let's say, 10%. Somebody was making $2,000 of payroll, is now making $1,800 of payroll. That's still a yes as far as that's concerned. And you did not reduce the number of employees or the average hour paid hours of employees between January 1st and the end of the covered period, then you can use the easy application as well. Similarly, number 3, didn't reduce by more than 25% the pay, and you were shut down, or unable to operate at the same level of business activity as before February 15th due to compliance with COVID, suggestions, guidelines, etc. So we do believe a bunch of folks are going to be able to qualify for this because those 2 parameters, number 2 and number 3, are pretty wide open. And I know just in conversations with a lot of clients over the last number of months that they did what the intention of the PPP was, which is keep your folks employed and keep them working, pay them the same amount or at least really close to it and keep them working. So if you did that, then you're really going to be able to qualify for the easy application. Now, some folks, for one reason or another, weren't able to do that, in which case then, they let people go or they laid people off for a period of time, then brought them back. Those are the ones that are going to be missing out on the opportunity to use the easy application. But then what the government did is give us a lot of safe harbors and exceptions, et cetera, to still get those people, those employers up to 100% forgiveness, or at least as close as possible. But at the same rate, you have to go through those extra steps. Again, we've already done the work for you, so it's really not that big of a deal. My suggestion is the easy, just because I don't like giving people more things to scrutinize if I don't have to. So that's the rationale or the impetus for the suggestion.
Hey, Jason, just real quick. So since you brought up safe harbor there, and again, this is another one that we tend to, always have to remind ourselves. The safe harbor really doesn't have anything to do with the cover period, right? It only has to do with making sure that you get back to the right number of employees and the right amount of salary. Is that correct?
Yeah, that is correct. The covered period is tied to the reductions from forgiveness. So the reductions are, reducing your forgiveness amount due to, laying people off or reducing their wages, right? Not having the same FTE count or not having the same wages. So the safe harbor rule or provisions are tied to those things. So it's not about the covered period or the alternate covered period, anything at all. It's about the reductions to forgiveness.
Gotcha. And so if I had to reduce FTE or I had to reduce overall payroll, but I got that back up before I submit my my loan forgiveness application, basically that submission date becomes my new safe harbor date, right? I mean, you don't have to wait until December 31st or anything like that. It's as soon as you get it back up within those guidelines, then you're good to go.
Correct. That was what we originally kind of thought when the law got passed, but the application clarifies that and gives us, it specifically says, what is your employee count, or FTE count, et cetera, on December 31 or the date of this application. So if somebody was doing it in January of 2021, they're asking for December 31 numbers. But if they're doing it in August, they're asking for August numbers. And so that is correct. Yep.
Cool.
Okay. All right, let's move along here. All right, so the application easy tab. So for everybody that's listening in right now, I'm actually going to jump over to the application or the spreadsheet itself. These tabs or these panel, these what are they called, Nate? The screens. Right. Are part of the PowerPoint presentation, and they give some additional instructions. But instead of just telling you about it. We're actually going to go into the power or the spreadsheet itself and walk you through that. So they're here. You'll have access to these when you pull up the PowerPoint in the future, if you want to look back at it. But we're not going to actually go through the next bunch of slides as slides. We're going to go through them in the spreadsheet. So,
hey, Jason, just real quick before we had a kind of another question here on that easy qualification. If you could go back a slide, I'm sorry. But if you have, so one of the questions is that they did have some employees that were laid off. And I guess what I don't know here is if it, let's just kind of make kind of two assumptions. One, if during that cover period it was more than 25%, and one, if it was under 25%, but they brought the people back, and so they're back, within the guidelines. Does that prevent you from using the Easy app?
So I believe the way that I would interpret that is the 25% during the covered period. So they're looking at the covered period as the full period, not a payroll, not two payrolls of the full period. So if, for instance, I wasn't sure, I got nervous, I reduced somebody to 50%, I'm just using simple numbers here, for one payroll, and then got my PPP money and okay, you know what, everything's gonna be okay, and I brought everybody back up to their full normal pay. Well, over that 8-week period, they're not a reduction of 25%. They're a reduction of 50% for one payroll, but if you do the math on that, that's only going to be what, 10 or 12%, for the full 8-week covered period in the example. So during the covered period, did you reduce them by more than 25%? The answer would be no, you're fine. Right. It's not asking, did you do it for any random payroll or any random check or anything like that? It's asking the covered period. So you have to look at it as a holistic 8-week or 24-week or whatever, period of time. So does that answer that question, Nate?
Yeah, I think so. And so, what a possible strategy would be for that then is you're probably looking to extend that cover period for as long as you possibly can if you're back up at the right FTE and salary, so that you have more time to make up that deficit and average out that time that you didn't have those employees on your payroll.
Yeah, FTE is going to be tougher because in number 2 there, it doesn't say like a percentage, it just says, did you reduce? So that one's going to be tougher because you did reduce. Yeah, I brought people back, but I did reduce. Or did I bring down the average pay, hours paid? Well, I did. And so, yeah, I guess from an average hours paid, I could extend out the covered period a bit and maybe get back to my number. But if I literally laid somebody off for a month or whatever it was, it's going to be hard to say, no, I didn't do that. Well, you did. Okay. But again, you still have number 3, which is, well, I wasn't able to operate at the same level of business activity. That's why I'm actually qualifying for the Easy application. Okay, well, that's a different story. They're not asking specifically, did you lay somebody off or anything of that nature. Also, I will say this, we simplified these criteria a little bit to get them on the screen and make it easier to discuss, but there are some specific details in the actual application itself that give you a little bit of almost like an exception to the rules or to the criteria in the criteria. So we didn't put that in here, but when you look at the actual criteria, the actual application, technically it's on the instruction page of the application, it will show you that, well, but you can exclude somebody that, like, I believe one of the exclusions was if they opted to reduce their hours or whatever it was. I didn't reduce it on you, but you asked me to reduce hours. That's not counted against you. So you can still say, you can still be affirmative to applying for it. So there are a couple of things like that are baked in there that we just didn't put into this detail here.
Awesome. And then just one more real quick question on that. So furloughed employees, even though you're paying health insurance or the medical insurance, because you're not paying their salaries, that does count against that 25% reduction, correct? Yeah.
Yeah, so exactly. So if you're not paying them and it's during the covered period, now again, the 25% is during the covered period. So
Yep.
if they were furloughed, I got the money, brought them back, and I paid them normally, that 25% isn't being impacted by the fact that they were furloughed for a month. But again, going back to, did not reduce the number of employees or the average hours of the employees between that time. That one's where you're going to have a harder time saying, yeah, no, I didn't do that either. Well, you did. You laid off or furloughed, 3 people for a month. So
Yep.
it's got to pay attention to that.
Cool. Thank you. Let's look at the spreadsheet.
All right, so like I said, we're going to jump into the spreadsheet. Give me a second while I try to get my screen. And where is my, there it is. All right, can everybody see that? Nate, can you see that?
We can see it.
Wonderful. So when you generate the spreadsheet, you hit that little generate button. Like on my screen in the bottom corner, I get a file that basically it produces, and I have to open that file. It opens to this. Also, and I don't know if this is just an internal setting that I have, but I want to make sure everybody is aware of it. Mine always opens up and it says you need to enable editing. Well, if you start clicking through the tabs before you hit enable editing, like none of the information shows properly. And I don't mean like it's wrong bad. I mean it's like it's just not flowing through. So once I hit enable editing, then all of the calculations and everything start to cycle through, and I can see all the data. So I wanted to point that out just as kind of a housekeeping thing, so I don't get 101 phone calls of people saying, well, there's nothing here. So you need to make sure you do that. Down here, you'll see this is the the instructions page tab, and they're all down here. So we got application, application easy, Schedule A, Table 1, Table 2, owner's compensation, and employee details. For those really sophisticated folks in the room, there is one more tab in here. It's hidden. It's hidden on purpose, but I'm addressing it because I'm afraid somebody might actually unhide it and see it, and I just want to make sure I address it. There is a tables tab as well. Do not touch the tables tab. That is specifically hidden because we don't want you to touch it. So if you happen to unhide it, please don't go in there and mess with things, because if you do, you'll wind up breaking a bunch of stuff. So keep that out of it. Again, we remind everybody yellow fields, green fields, what they mean and how things work. We also walk through page by page of each tab and what needs to happen. Okay, so again, we've tried to make this as turnkey as possible. Again, you're not having to pull the data, but we do need you to make sure that you're putting in the information that we don't know. And there is, unfortunately, a decent number or bits of information we don't know. So I'm going to start with the easy application. I think that's what we said we were going to do, right, Nate? We'll start with the easy application. Okay. So I know it's the second tab, but because this is the one I want to emphasize for folks, we're going to start here. Oh, there is one other thing here. This is to review the loan forgiveness easy eligibility. We've got a hyperlink right here that you can open up, and you can see those extra little criteria that I was talking about. It opened up on another screen over here, but let me see over here. So again, there are a little bit more detail here in what, again, for purposes of the statement employees means only those that did not receive during the single period, blah, blah, blah. So it just kind of goes into a little bit more detail. So that is a hyperlink right in there as well. But easy application. So I actually have pulled this from our system. I changed a couple things. Anything in green, remember, is populated by the system. I changed it to say, protect the innocent. Just these are now company name, etc. But if your company name, if your address, if your tax ID or phone number is not what it should be in this, one of the things I'm going to suggest is you reach out to your CSR and get that updated, because this is what we have in our system. So if you do feel you need to edit any of this stuff, reach out to us. Make sure that we get our system updated as well. Again, anything in yellow is not pre-populated, so again, you have to put that in. We're not sure who you want to use as your primary contact for this, or their, the email address, etc. Again, EIDL advance amount, if you got it. If you didn't get one, that's not a problem. You don't need to put anything in there, so that's fine. I had already come through just because I was testing through this, and I put in the 150 for my example here. When I picked it, I used my loan distribution date of 5/11, so that pulled right in. It also looked at the system and said, okay, well, based on 5/11, you had 20 employees at the time of that application, and based on today, I have 20 employees at the time of this application, the forgiveness application. Again, if this one should definitely be spot on. If this one happened to be more or less at the time that you did the actual application and not the distribution date, then you can edit that, update that for us, not a problem. Let's see, and this is not FTE, this is actual employees. So there's a difference. The FTE is all about the reduction and the calculations. This is just asking you how many employees do you have. And so that's an actual employee count. Again, we left this blank for people because, again, we've got some folks that have multiples. If you pick multiples, you can click on, my suggestion would be click on like other and then type in, you know, like biweekly and semi-monthly or whatever it is. Your dates here, and then again, we don't know if you have what your loans are or anything, if you have multiples with affiliates, etc. If you have more than 2 million, you have to check that box as well. Down here, you'll see that you need to put in the mortgage interest if you have it. This pulled from the system directly, and I'll show you where that gets. And remember, gray boxes are system generated, and you shouldn't have to touch these at all. This one pulled in from the system or from the employee details and these other tabs. I'll show you that in a moment. The mortgage interest or the rent, if you said you had, you know, $25,000 in rent, okay, well, you just need to key that in. And you'll see that the spreadsheet automatically updated, of course. If I have 0 here, it says that, well, there's my loan amount, or that's my payroll costs. I had 150,000 in my loan amount, but I'm limited to the 143.99 in my payroll because that's all I have. The minute I put in $25,000 here, it says now I can get forgiveness on all 150. So just to give you the examples how that works. Again, this is the easy. So there's a few less things that you have to complete on this section than what you would have to complete in the other application. But it does the math, it does the comparisons for you. It's right here. Even has all the little fun logos and everything else. Now, I want to kind of jump to a thought, which is I know that some lenders, some banks are building a portal for their collection of all this data. If they are doing that, then my suggestion to you is just take this information and key it right in. If they will accept the application, then you can print this out, put it into a PDF or whatever it is, and email it over to them. So some lenders are likely going to be accepting quote unquote paper. This will work for them. Some lenders will want you to complete their portal, just lift all of the data that you need right from this and fill it out. So this will work for any client. It's just a matter of how is it getting communicated to the lender. So go to the page 2. All of this is just things that you have to attest that, okay, yeah, dollar amount, which is forgiveness is requested. And so it's the standard stuff, kind of like when you filled out your original application, they were asking you to acknowledge and you agree the SBA may request additional information, blah, blah, blah. So again, this is required. Signatures here, title, whatnot. And then page 3 is just, some basic information about the application itself. And this is the government application, the actual SBA application, not our system generated application. This is government related stuff. And that's it on the easy application. The only thing that a lender could really want to validate is your payroll costs, which we can show you, how to help and do that, and or these 3 figures down here, which again, you'll have bank statements and, a copy of your lease agreement or whatever it is that you can provide them. So again, the less to scrutinize, the better. This is your preferred option in that respect. So there you go there. Jump over to the full-blown application. Works the same up in here. Everything is consistent there. It has the extra fields for the reduction, the FTE and the salary wage reduction section here, and then the calculations are down here. So there's a few extra fields. Again, these are gray, so they're populated by the system, but again, it's relevant. And then again, the other pages work the same, or that page works the same. This is where your Schedule A application filters to, or Schedule A of the application filters to, and this is for the calculations for the reductions. So enter the cash, enter the reduction amounts here, et cetera. This is how everything filters up to those numbers. You'll see here, there's a green box and a yellow box. So the yellow one, you have to tell us, it defaults to no, but you can change it. The yellow one, we populate based on the information, but if you believe what we populated is incorrect, as I said before, you can edit the yellow or the green fields as well. So this walks through the rest of that calculation, and then you get back to the same page that the easy application has. So this is the quote unquote application. There is a bunch of additional information here because that's how the government designed it, and so we're complying. So Nate's question so far?
Yeah, so a couple questions on that. Let me see where to start with. So if somebody was using sick pay, like the COVID sick pay, how does that figure into the wage calculations? If that was kind of the reason for the reduction in pay, was because they were using the COVID sick pay?
So so COVID sick pay is not inclusive of, or is not available for forgiveness, but it isn't harming you for the calculations. So it's when they're looking at this, what the application actually is talking about is what is their salary amount or what is their hourly amount, not what is their total pay that was paid. So for instance, if somebody was making $20 an hour and they had a bunch of overtime and now they're making $20 an hour, but they have no overtime, well, that's not a reduction in pay. That's zero reduction in pay. You still got paid $20 an hour. That is zero reduction in pay. Or even if you wanted to say, but now they're making $18 an hour and of course no overtime. Well, geez, now they're below 20% or 25% or whatever. No, they're 10% reduction in pay. You're fine. So it is actually the rate and not the wages per se. And that's why you have to go through the calculations, because they make you calculate it out in a manner to identify, is it the same, or is it within the 25% of the pay? So the COVID sick pay won't damage you for that, because again, they still got paid and it was a matter of how they got paid, etc. But you don't get to include COVID sick pay as forgivable amount for payroll costs, but it does not impact the calculation for forgiveness.
Awesome. So a couple other things. So on those payroll costs, does that include medical benefits, profit sharing, retirement contributions, anything like that? Is that included in that?
So that's a great question. And so I'll jump to this page of the application. Payroll costs, total payroll costs up here are everything. Okay, that's the definition of payroll costs is wages, employer contributions to health insurance, employer contributions to retirement plans, and employer state taxes. Okay, that's the definition of payroll cost. It's not my definition of payroll cost, it's the government's definition of payroll cost. So this number here is a summary of all of that. If you go lower in the application, it actually breaks out those pieces individually. So in this section here for worksheet Schedule A, Table 1, that's the payroll, that's the cash compensation for Schedule blah, blah, blah. Where is it? Schedule 2, it's down here. I missed it. 2. So that's the cash compensation. Then you have your table, oh, there it is, Table 2, cash compensation, etc. And then down here, you will see total amount paid or incurred by Bauer for employer contributions to employee health insurance. That is a separate number. So in the schedule, in the worksheet, we have to break them out. But in the first page of the application, everything is summed up. So it is inclusive in payroll costs, and our system is doing that. Again, if we don't have your benefits, your health insurance in our system, you're just doing deductions from the employee checks. We don't have the amount that you're contributing and what the total premiums are. Then when I get to employee details, I'll show you where you can plug that in so that it will filter into here. But in this scenario, that's what we're looking at.
Okay, and then so those payroll costs, that's inclusive, right? So that if it's not one of those defined things, then it's not payroll. So like workers' compensation
is not payroll costs. That's why I said it's not my definition of payroll costs. It's the government's definition of payroll costs when it relates to PPP specifically. So they have defined what is quote unquote payroll costs, and that's what's pulling into the system here. Yep.
Awesome. Cool. I know that we're going to get to some of this stuff in some of the future tabs as far as like where to enter owner salary and how to designate owners. So I know that we're going to get to that, but I guess a couple other questions just on some of the technical nuances here. So if you give employees a raise during the covered period, I mean, that doesn't hurt you at all, right?
No, not at all.
Yeah, in fact, it could potentially help you.
It could help you. I mean, if you had reduced their hour or their rate at one point and then you gave them a raise after the fact, it could help. But yeah, a raise does not hurt you. Giving a bonus doesn't hurt you. The only time I would say giving a bonus hurts is if somebody gave like a ridiculous, unusual bonus. So somebody's making normally 40 grand a year and all of a sudden you gave them a $60,000 bonus. Okay, well, wait a minute. You've never done that before. What the heck's going on? The only reason that is a concern in my mind is because it'll probably raise a red flag. It'll probably raise questions from the lender. The SBA is like, why? What did you do there? But if you normally give a quarterly bonus to your team for production goals or whatever it is, and during that 2-month period, that 8 weeks or the 24, you give a bonus and it's in line with those normal, I wouldn't be concerned about that in the slightest, because you can say it's usual, customary, and it's part of my operations. I've been doing it for the last 5 years. This is normal. So that doesn't concern me. So that won't hurt you either. So.
Cool. Hey, I just want to, I know that we're right up against an hour, and we don't really have a whole lot more left. But if you do have to leave, I do want to just let you know that we will be sending out not only the PowerPoint, but we will also have a link to a recording for this, so that if you have any questions, we will be sending that out to everybody after this is done.
Very good. Thank you, Nate.
Yep.
Okay, should I continue on?
Yeah, I think we keep going.
Okay. So tables 1 and 2 and the owner compensation are all pre-filled by the system. You don't have to do anything. They're all gray. 1, 2, and the owner compensation. Why this matters is this is part of the documentation for the application. So we built them specifically, but all of it is managed in the employee details tab. This is where all of the data is being pulled together and all of the calculations are happening. So it looks a bit mammoth. It looks a little overwhelming. I'm going to suggest that it's not as bad as it looks. Now, there are a couple particular things you can see in here that there's this 2 sections here that are yellow. Everything else is green or gray. So I'm going to point these out. If you had a person term, this is one of the criteria, one of the big important elements of the CARES Act, and then all the additional guidance that came out. There are exceptions that will help you reach full forgiveness, even if you did have somebody that you had to let go, or you did have somebody that didn't come back from being laid off or on furlough or whatever. And that's right here. This is information we don't have, which is why we built it this way. So for instance, if this, and I again took out the names to protect the innocent, if employee A was actually let go because of cause, well, I can make that election. And then as a result, he's in table 2. He's not gonna, it's not gonna be treated the same way as it was before, okay? So it's not gonna count against you. Similarly, if person B here, employee B, is an owner, we want you to say, tell us, yes, they're an owner. And we need you to fix this one right here, this table 2, move them, or table number, move them from 2 to owner. And so now what that does is now puts person B on this table instead of table 2 where they were a moment ago. Okay, and if we feel that anybody is in the wrong table, we can move them. Now, the system is doing this. I've already tested a few, worked with a couple clients, and some folks had given me what they believed everything was. The way that the application reads is this. Receive compensation by our annualized rate of less than or equal to $100,000 for all pay periods in 2019. Okay, what that means is if you gave a bonus to somebody on one payroll, and that one payroll, because of the bonus, annualize that number out, they're over 100,000, they're not going to show up in table 1 in our system, they're going to show up in table 2 because the definition of that. So while you might think, well, the person only makes 80 grand a year, well, with that one bonus, that put them past that threshold based on that definition. So they're going to show up in table 2. Now, you can change that in here. You can move them back to table 1. But our suggestion is that's not accurate. That's not the way that the system actually, or what would actually be, because if you annualize out each one of those payrolls, they were over the 100,000, and so they should be on table 2. So now in that scenario, table 2 is actually a better table because it eliminates one of the criteria for reduction, which is this wage and salary reduction. But at the same rate, I'm just trying to give a point here. If it were going the opposite way, if we put them on table 1 and you say, no, they should have been in table 2, well, double check that, because we're doing the math on every payroll and we're saying they should be in table 1. So they just need to make sure that they're in the right table.
And then if they do need to make that adjustment, they just go into employee details and make that adjustment there on that table.
Change it from over 100,000 to less than 100,000, and now they're going to be an extra person over here instead of somebody on table 2. Yep.
Awesome. So real quick, is there in the drop down for the employee details, Jason? So if somebody retired during the covered period, do we have what would be the drop down to use that? So voluntary probably.
So voluntarily resigned or requested reduction in, and I can't remember the reduction in hours. So if they truly did like retire, okay, they voluntarily resigned. Clearly, that's what a retirement is. So that's the answer. So it's easy. So.
And then if an employee wasn't employed at all during that cover period, what should they use?
That's this one down here. If the employee wasn't included at all during the covered period, then again, the system should identify that, and it should say, no, they're not included, because what the criteria is if they were employed at any point during the covered period, blah, blah, blah. So our system is looking at that and should be assigning them based on these criteria. So if they weren't employed at all, they shouldn't show up on any tabs or any of these sections, and their table number should be not included.
Cool. As far as owners go, so what this, and as far as the PPP and all of that, it's really, this only really covers owners who are compensated regularly through their business, right? So like if I'm a if I own an LLC and I just take distributions, how
Correct.
does that get included in this or not included in this?
So yeah, if you're paid through the system, that's included. If you're taking like a K1, that I believe is specifically excluded from all of this. And so you wouldn't be in here at all. So yeah, for the most part, it's for people that are getting paid through payroll. It's kind of the simple way to say that. Yes.
Yeah. So if you're just taking distributions as an owner and not actually receiving a salary from the system, it doesn't count towards or against you. It's just
This is nothing, right? It's not part of the payroll costs. It's not penalizing you, but it's not part of payroll costs.
Yep.
Yeah, and it shouldn't have been part of payroll costs when you did your initial application either.
That's right. That's right. Yep. Okay.
All right. So the last thing that I want to show on this in particular is for those folks that don't have all of their benefits data through us, they don't put in like the or we don't manage their benefits, their COBRA and all that fun stuff. So all of the figures are in our system. You're going to have a number at the end of the end of it all that says, hey, I need to add $22,000 for benefits. Well, over here and all of this fun loving stuff over here. Now in this case, this example has it already included, but let's just say there was an extra $23,000. You could either go through employee by employee and key in their specific dollar amount, which is totally fine, nothing wrong with that. Or you could just put in 23,000 here. And then when we go back over to the application, you might have remembered that that was like 60, whatever, 1,060 or $6,900. But now that I added 23, it's now $29,000. So if I take that back out, let's see, now it's 69.77. So again, I'm suggesting don't update it here, update it in here, even if, again, it's not managed through us. Just put that figure in here and it will filter into where it needs to go just fine. So,
cool.
Okay. So that's really it as far as the tabs. I mean, again, it looks like there's a lot of information, and I guess in all reality, there is a lot of information, but there isn't a lot that the clients need to do. They just need to make sure these bits of information are there. Again, if you haven't been with us all of 2019, then this page is going to be more relevant to you because a lot of this is going to be missing because we just don't have the data. So you can plug in the information here and let the system do all the calculations. But if you've been a client for all of 2019 and on, most everything is going to be done populated. You just need to tell us the things we don't know. Employee F, was unable to rehire, so, and this person here is also an owner. Yes. So I need to switch you to table 3. So that's about it. As a general rule, what's in green should be good. Again, with the exception of clients that we don't have 2019 data for, that is going to be a little bit more of a requirement here to fill that out. So,
and Jason, for regardless if you're doing the full revised application or the EZ application, you have to fill out this employee detail in order to get kind of that comparison, correct?
Right. So the employee details is what generates the data into the system and what ultimately pulls into this payroll costs. So even if you're doing an easy application, this information will be in here. And again, like if you're a client that we don't have 2019, that one's not nearly as important because as long as we have the data for 2020 to calculate the total payroll, we're fine. Where the 2019 comes into play is more in the reductions and those kind of calculations. So it's not as much of a concern under the easy application that we don't have that 2019 data. But yeah, so that it's just the easy still pulls from the same table structure. And so it is important to make sure that we have the data we need, at least for the payroll costs. So if you came in, let's say, even mid covered period. I don't believe we have any clients that came on board mid-covered period. So you would need to fill in the data that we just didn't have before. So.
Cool. And then, I think the other kind of big thing with this is that, this is like any other spreadsheet that you would use. And so, any changes that you make sure you're constantly, saving and putting this into, a file location where you'd want to, store all the documents that are related to this PPP. What's the time frame to store those documents again, Jason?
You mean how long you need? I believe, if I'm not mistaken, it's 7 years is what they have to go back and do audits. So.
Yep, I think that's right. So, cool. So just, I guess, a couple questions around employer contributions to retirement plans. So prevailing wage, trust fringe amounts, that's kind of included in the retirement piece. Is that included in payroll?
Yeah, so exactly, would fall into the retirement section, or that that column of data, and yes, those would then pull into the payroll costs as well. Correct.
Cool. And then and it's only the employer portion, right, and not the employee portion.
Correct. It is not the whole amount. It is only the employer portion for both retirement and health insurance. So if for a health insurance standpoint, if something costs $1,000, you pay $500 of it. Well, $500 is what can be forgiven. The other $500 is not included into the calculation for payroll costs. Same thing with retirement planning. The employee might have put in $1,000 of their money, and you matched or you contributed $250. Well, only the $250 is part of the calculation for payroll costs.
Cool. So this is a question that I don't know if I've ever heard before. So, and I think it's an interesting one. So the EIDL loans are included into the amount that's forgiven, right? And so that kind of, they bundled those two together at the beginning. What if you never actually had a PPP loan and you only have the EIDL? Are you eligible for forgiveness?
No, because if you never got a PPP loan, then it didn't get bundled into the PPP. So
okay.
Yeah, I mean, the PPP is what's forgivable, not the EIDL. So if it got rolled into the PPP, then fine, you're going through that process. But if you didn't, I don't think they're going to look at that. I mean, I guess, to be totally frank, to your point, I've never seen that. I haven't heard of that one. But if you just kind of walk through the logic of it and how things flowed when the laws got passed, you still have an EIDL loan. You don't have a PPP loan.
Yep. Okay. All right.
Okay, so we good through that?
Yeah, I think so.
Well, I'm going to jump back over here, and we're almost done. I'm just going to fly through these tabs because this is what we just talked about in the actual spreadsheet itself. So I'm just going to get back over here.
Just, I guess we did have one other question. So as far as the utility payments, and you can kind of still rip through these while I'm asking the question. Okay. As far as the business utility payments, is there any definition around what's considered a utility?
Yeah, actually, I did see that. It's been a while, so it's forgive me if I miss it, but it's, I mean, standard utilities, so telephone, electric, water, those kind of things. They did include, this is one of my favorite ones, transportation, but they didn't define what transportation means. Mm-hmm. So the kind of consensus that I've heard about that is, if transportation, quote unquote, is part of your business, that could arguably be a utility. If it's just an arbitrary, hey, I'm going to refund some money to employees for their car loans or whatever, probably not. And my example would be like if you're a delivery company and you have 10 trucks and you're putting gas in those trucks every day, well, I think you could argue that transportation is part of your core business, and so therefore that is a utility. But again, if you're TAG and everybody works from home and I'm just giving people reimbursements or whatever for auto, probably not legitimate. So those are kind of extreme, examples, or I think a fairly clear example. The challenge always is those little nuanced edge cases, right? Those little, well, it's kind of, but so you'd have to evaluate that and kind of apply it to the scenario that I just shared.
And we do have links to that. So I know that we went in depth into that in late April and early May. And so if you do have some additional questions on that, if you just go into Viper under the resource tab in the blog, we do have links that that define all of those, like down to the very, very detail of what can be included and what cannot be included.
Very good. All right. Let's see here. So important deadlines. Again, we're almost done here, folks. So I appreciate those that are able to staying with us. Important deadlines. PPP loan is August 8th. So if you haven't already applied and you're on this call, I'm going to suggest you get that done really quickly because you only have a couple days to get that submitted. You have until December 31st or the date of your forgiveness application to restore your employment and furloughed employees and that kind of stuff to qualify for safe harbors. That was something that Nate and I talked about earlier. But yes, it's December 31st if you're doing the application after December 31st, but it's whatever date you're doing the application if you're doing it before December 31st. And then the last one here is there isn't really technically, from what I've heard or been able to find, an actual due date or time limit on the loan forgiveness, but there is something that's very important, the application, submitting the application. But there is something that's very important that's tied to it, which is the new PPPFA law said that all loans are on hold until the 10th month after your covered period. So for instance, if I got, I'm in the 8-week, or if I'm in the 24-week, and my 10 months after the 24 weeks puts me into July of next year, let's say, well, if I haven't submitted my application for forgiveness before then I have to start making payments on that loan after that 10 months. If I, however, have made or submitted my application for forgiveness, my deferral of payments extends until the loan forgiveness decision is made and money is sent to the lender. So assuming you got 100% forgiveness, you'll never pay a payment, even if it takes 2 years. Now, I'm not suggesting it's going to, I'm just using that for the example. But if you have $5,000 that you have to repay of your $500,000 loan, well, you're not going to have a payment due until the end of until the time that you got the money or the lender got the money from your forgiveness approval. So again, if that's 2 years, you're not going to make a payment for 2 years. So that's a very important one to know. So there isn't really a deadline as far as a requirement for the forgiveness itself, but clearly for the application or for the deferral, that's an important distinction and understanding that. So there's really at this point no reason to delay the forgiveness application. There's also no reason to get overly excited and get it done immediately unless you have reason of, hey, I might be having to let people go or lay people off, and I want to use the numbers that I have today as my safe harbor numbers, and so I want to get my application submitted immediately. So you've got some control there, I guess is the best message that I can share. Okay, so printing. If you're printing if you're using the Easy application, all you have to do is print all pages of the Easy application tab. That's what you're submitting. If you're doing the full application, it's all pages of the full application tab, all pages of the Schedule A, Table 1, Table 2, and Owner's Compensation tabs. That is the requirement of what you would need to submit. Now, that's just the application requirement. That's not all the documentation. Remember, you'll need to include bank statements and your 941s and the state returns, or, whatever the lenders and the application are sharing or suggesting. For the Easy application, again, only give them what they require. I wouldn't give them more. For the full application, again, still wouldn't give them more, but make sure you give them everything that they're looking for. Otherwise, it's going to delay the process of your application. So let's see here. Yeah, you have to submit it to the lender. That's who starts. And again, some are going to be doing electronically through a portal. If that's the case, again, lift this information, put it right into the portal. If they're not able to do a portal and they're just accepting like a PDF or whatever, generate this, PDF it, sign it, do what you need to do, initial where you need to initial on that one page, and then email it over to them. So you should be good. So as far as legislation update, we'll go through this really quickly. There's a couple laws that are in committee right now, HEALS Act and HEROES Act. As far as PPP, the most significant thing, and people have probably heard the term P4 thrown around. There is talks of allowing employers that have already qualified and already received money under the PPP to have another opportunity to apply and get more money. So this is not specifically for employers that haven't done it yet, but even allowing employers that have already gotten PPP funds and forgiveness for that matter, another shot at that and getting more funds. So that's kind of a big deal out there. Again, hasn't passed yet, still in committee. We'll update you guys on that as things go along. Also, as part of these, I mentioned at the last webinar that there's some talks about possibly having the Employee Retention Credit Program apply even if you got a PPP loan. Again, all in talks still, nothing's passed, and if it does, believe me, we will let you know, because everybody's world will kind of turn upside down again as we figure out how to coordinate those two programs together, because right now they've been like a choose your own adventure. You can go down door A or door B, but you can't do both. So that will probably have its own fun results as a consequence.
Yeah, I think the interesting thing between both of these legislations is I actually spent quite a bit of time last night and this morning kind of going through them because I knew we were going to talk about this. Both of these, so one is a Republican Senate bill, the other one is a House Democratic bill. The interesting thing is from the business aspect, they're almost identical. There's really not a whole lot from a business standpoint. There's the extension of the PPP, there's possibility of that second loan, there's higher eligibility for the retention credit. They're almost identical. It's where they're apart is on the direct payments and some of the other things that that are non-business related. So I think whenever this stuff does get passed, I think we're going to find very similar and not a whole lot of surprises when it comes to these business pieces.
Yeah, and and that's a good point. It's election year. Both Republican and Democrat, are suggesting basically the same type of stuff. It's likely going to be passing here. It's just a matter of when more than anything. And what it looks like exactly at the end. And yeah, we'll keep everybody updated. But thanks for that, Nate. I do appreciate that. That's good information.
Yep.
Any remaining questions for the folks that are still on with us? We still have quite a few. So.
Yeah, no, I think we got through everybody and answered everybody's questions. So I mean, it was a lot of great questions, a lot of good interactions, and I just think that first of all, Jason, I know how much time you put into this, and our development team, and Jack and Alex,
and everything like that. And I just, really want to thank you and everybody for, on the team for putting this together and making it really easy for clients to, to kind of slog their way through this.
Well, appreciate that. Yeah, Alex and development team, like everything they do, is amazing. So we appreciate definitely them because obviously clients are reaching out to us, and it's hard to answer these things without something more automated to help with that. So this is the solution for that, and clients can feel much more comfortable that what they're getting, that the end result of what they're getting is accurate and can be supported with documentation and everything. Even if again you had a really overzealous lender that wanted to look at detail, all the details there. It's just a matter of it's all in the system, so it's just a matter of pulling it out. And if it really came down to it, could we produce additional reports or whatever? I'm sure we could, but hopefully with what we've done, trying to generate it the way we've done it, that it's going to be in the format that they're looking for, and they're going to be comfortable with it from the very beginning. So that's the goal. So I appreciate that.
Yep. So I think as with anything, if you have any questions, the email address is corona@tagpay.com. We finally got
now
and actually see those. So we apologize for the last time, everybody. We thought we had it forwarding to the appropriate people, and it wasn't. And so some of those questions got delayed for a little while. That has been resolved. So, as you guys have questions and any comments or concerns or anything like that, as always, we're here to help. We're here to be that resource for you. So if you do have anything, please reach out.
Very good. And remember, the generator's online. It's ready to go. You can go over there right now and pull the spreadsheets. Also, Nate, are we going to get this up tomorrow? Is that the intention?
We have this up before the end of the day. So we just need to make sure that this recording gets compiled and compressed so that we can share it. And all of this will be up before the end of the day.
Excellent. And then I'll do a blog post out to everybody just one last time saying it's up. Remember, the generator's online. Everything is good. And you guys have fun.
Thank you, everybody. We appreciate your time.
Take care, folks. Bye-bye. You guys order pizza? I didn't order pizza. I ordered Which